My next guest, though, is a big fan of investing in China. He's one of the biggest investors in Renren, that is the Chinese version of Facebook that started trading here in New York yesterday. Venture capitalist Dixon Dahl's firm has a nearly 2% stake in the company that is now, or 2% voting stake in that company, valued at more than $1.5 billion, all thanks to that incredible surge in Renren. Dixon, great to have you with us.
Nice to be back.
Now, I know you can't talk directly about the company, but I mean, this whole story, that story that I just read about, questions about financial accounting, all of that took place also with Renren. I mean, how do you have faith in any of these numbers?
Well, I think you have to rely on the approach of hiring a really great auditing firm that has a global reputation and be sure that the people that are involved in supporting your company from that auditing firm really have experience in China, and similarly, you need to craft a very experienced board of directors that have prior experience in performing that function in Chinese companies.
So you went through the paces, obviously, with Renren.
Absolutely.
The company, though, considered a Chinese version of Facebook. Aren't a lot of these internet companies we've been talking about that have been getting a lot of dollars from foreign investors, I mean, aren't they all just sort of copycats of what we've seen here in the U.S.?
We don't think of it that way. There are enough differences of very significant nature about the way the Chinese economy works and the role that the government plays that it would be completely inaccurate to characterize them as copycats.
Now, Dixon, one of the things that we talk about is this tremendous growth opportunity. These are all advertising-based models, at least here in the United States. What is the advertising market going to look like in China as that emerging middle class starts to kind of grow?
China's in a great position to soon become the world's second largest media market, and I think that the role that advertising will play will evolve in a way that's fairly similar to what we've seen here in the U.S. But it's a really big deal, and advertising is going to be an important component of the monetization for these companies.
Right, but they don't generate as much margin, though, from advertising, right?
That's correct. So you make up for, it's still profitable, but because the numbers are so huge. I mean, China has over 805 million mobile users now, for example.
But that means they have to work harder to generate the returns to justify those valuations.
I think the way we look at valuations is that the leaders in the particular sectors and segments of the internet in China can easily justify the valuations that you're seeing happen. Okay. The place where the disconnect will occur is with the second and third class companies.
So let me pull up this one chart that we have that you brought talking about Chinese venture capital money. These are Chinese investors, right? Chinese venture capitalists. And what you're saying is that, in fact, look, in 2010, almost as much money has been raised in the U.S. as it has been raised in China.
That's correct.
And what's driving this is what, exactly?
It's the explosive growth of the Chinese economy in general. If you go back 10 years, they really didn't even have a venture capital market there.
Well, it's also like if you talk about Glencore, that huge commodities IPO that we keep talking about, not raising money here in the U.S., raising money in Europe and out in East Asia. So, again, people are saying that the U.S. may not be the capital center it used to be. Right. It's still huge, but, again, people are moving outside borders.
But that money flow, though, is what's driving up valuations in China.
I think that's correct. That's normally what happens. Money goes where it's treated the best, and the growth rates and the size of the market for all these companies that people are investing in they're extraordinarily high, and certainly in relation to what's going on in the U.S. So that attracts a large amount of venture capital.
But Dixon, are the valuations there as out of whack with the fundamentals of those companies as some are saying here in the U.S.?
I look at it this way. I think there are probably too many companies that are getting funded. But if you actually, as I said before, focus on the leaders will justify the valuations that we're seeing now. And it's the ones that aspire to become leaders and don't make it.
The B and C classes.
That's right.
Do those get acquired, or do they just go bankrupt?
It's all the above.
Okay. And how does it make, the fact that you're now competing with Chinese money, how does, you were before anyway, but competing with Chinese money, how much more difficult does that make your investing?
I would say that if you go about it in the right way, my partner David Chow has done a phenomenal job of putting our team together there and hiring local people. If you go about it in that way, you can be a real mainstream player, and that's what we've tried to do.
Well, you talked about the hundreds of millions of smartphone, cellular-type customers that China has right now. How much of that is going to be growth in China based solely on this explosion in mobile computing as opposed to anything else out there?
It would be a combination of the growth in mobile computing as well as in just communications. One thing that many people in the U.S. With a more U.S.-centric view don't understand is that there are not that many desktop or home PCs in China in relation to the number of smartphones and regular mobile phones.
Mm-hmm. All right, but also, I mean, isn't part of this China growth story, and I don't want to, hammer down this point, but, part of that story, though, Dixon, is also because, some of the American companies, like Facebook,
yes.
or even LinkedIn, I mean, they're not allowed in China now. So, it's easy to say these Chinese companies are going to do well, but they're absent competition, major competition.
I think we've talked about this a little bit before, but the Chinese government, puts the rules in place, and it definitely gives the Chinese companies, home field advantage.
Have you thought about opening up a Chinese-focused fund?
Not seriously yet. We're very happy with the model that we have now, and we're able to supply, most of the amounts of capital that we need to seize on the opportunities. But it might be considered in the future.
Okay, but and a third of your fund, right, is in China.
It's
Am
actually
I correct?
closer to a half, not quite a half.
Oh, closer to half.
Yeah.
Okay, let's talk about this fund, this
Okay.
Android-focused fund. And I know we've got another graphic for it. But why did you decide? It's $100 million, but
Yes.
$100 million that you raised. Why did you decide to do this?
We constantly monitor the industry for important trends, and we saw that mobile and smartphones are exploding. And then we looked at the different platforms that are out there, and clearly the iPhone has been the most notorious one so far. But Android recently has been growing much more rapidly than iPhones, and has certainly got a much more visible pattern in the global marketplace right now. Mm-hmm. It's very importantly, it's an open platform as opposed to a closed platform.
Now, Dixon, one of the concerns that a lot of people have about open platform type applications is that there may be a lack of product consistency. When you have an open source kind of platform, people make it in all different looks, formats, views. Is that a concern? Do you feel as though the iPhone's huge gain right there is that they make everything kind of spot on there in their same format for everybody else out there?
There's no question that your point is correct. It's analogous to what happened when Microsoft introduced Windows 25 years ago. And there were many different versions of it, and the way we look at it is that this spurs a massive amount of innovation by entrepreneurs that are going to develop brand new applications.
But who are you going to fund? I mean, give me an idea of what types of companies, or who are you going to fund?
We're going to fund companies that participate in all aspects of the Android ecosystem. We have a company in our portfolio right now called Papaya, as an example. And it's a gaming platform as well as an Android-based environment that other applications can be supported on. So that's an example.
Well, let's key on gaming here. How big is gaming going to be? It seems as though these handhelds, Nintendos, DSs, PlayStation portables are all going the way of the dodo bird, strictly because everyone's got a phone app for that, so to speak.
Interesting you should ask that. One of the things that really most people don't realize is that Android's actually designed to cover devices way beyond mobile phones, gaming platforms. It'll extend into cars, appliances, consumer electronics, and devices of all types, which is fairly different from the way the iPhone works.
And that money that the companies that you're backing, they're here in the U.S. or overseas, or what?
They'll be all over, and I think we don't know the exact way that's going to play out, but we're encouraging entrepreneurs that have an interesting application for Android all over the world to get in touch with us, and we'll have a serious look at it.
But why not start a fund then around all the app makers for the iPhone and the iPad then? Why not that?
That probably would be a smaller market than this one. So we're trying to go with big plays that are going to be fairly ubiquitous from a global point of view.
And who's partnering with you on this fund?
We've announced the three sponsoring partners are GREE and KDDI from Japan, and then Tencent from China.
Okay.
And we will be announcing additional strategic partners sometime fairly shortly from the Western Hemisphere.
Western Hemisphere, I like that. Dixon, thank you. Great to have you with us, as always,
Good.
talking about all things venture.